So, let's talk about Honda. We all think we know them, right? Cars, motorcycles, a legendary brand. But when you dig into their latest financial report, whoa, it is a wild ride. It's a story of record-breaking success and, at the exact same time, massive losses. It's truly a tale of two Hondas.
And that's really the big question here, isn't it? Just imagine a vehicle with two huge engines. One is absolutely screaming, full throttle, pushing ahead like never before. But the other one, it's completely stalled out and is actually dragging the whole thing backward. Well, that's the puzzle we're going to unpack inside Honda today.
So here's the number that made everyone sit up and take notice. A 41% drop in operating profit. That's a fall of over 300 billion yen in just 6 months. Now, on the surface, that looks really, really bad. But believe me, that single number is hiding the real story.
Because this really is a tale of two different companies operating under one roof. To get what's actually going on, you have to split Honda into two. You've got the motorcycles, and then you've got the cars, and you are about to see just how differently they're performing.
And check this out. The contrast is just incredible. On one hand, the motorcycle business is on fire. A record-breaking profit of over 368 billion yen. I mean, that is just phenomenal. And on the other hand, the automobile business. A staggering operating loss of 73 billion yen. One side is soaring to new heights, while the other is in a deep, deep hole.
All right, so let's start with the good news, the hero of this story. You know, most of us think of Honda for its cars, but right now it's the two-wheel division that's the real powerhouse. It's the unsung hero that's basically propping up the whole company's finances.
And the performance, it's just stunning. We're talking record highs across the board, record sales, record profit, and an absolutely insane operating margin of over 19%. For a manufacturer, that's just fantastic. And this isn't just one hot market either. This is strong global sales, with places like Brazil and Asia really driving that growth.
Okay, so now we have to flip the coin over and look at the other side. What on earth happened to the car division? How does it go from being a profit machine to losing tens of billions of yen? Let's dig in.
Well, it wasn't just one thing that went wrong, it was everything, all at once. Honda's auto business was hit by what you can only call a perfect storm, a whole bunch of serious problems all converging at the same time. So let's break down these headwinds. First, sales volume dropped, especially in key markets like China. Then you've got the semiconductor shortage, which is still hitting production, particularly in North America. There were also some hits from trade tariffs. But the real kicker, the absolute bombshell, was a massive one-time charge related to a sudden and very costly shift in their EV strategy.
And you don't have to take my word for it. This quote from their own report says it all. Honda basically had to admit they were writing off huge amounts of money because they pulled the plug on one EV model and just completely canceled another one that was in development. Making a pivot like that in the car world, that costs a fortune, and it just slammed their bottom line.
And this chart right here, wow, it just lays out the damage perfectly. Just 1 year ago, in the same period, the auto business made a healthy 258 billion yen profit. This year, it swung all the way down to a 73 billion yen loss. That is a breathtaking reversal of over 330 billion yen in just a year.
So, okay, with this perfect storm hammering the auto division, what does Honda think the rest of the year is going to look like? Well, as you can probably guess, they are being much, much more cautious about the road ahead.
Because of all these problems, they've had to slash their forecast for the full year. Look at this. They chopped their operating profit forecast from 1.2 trillion yen all the way down to 550 billion. They cut it by more than half. And their total profit forecast, that's down by nearly 2/3. It's a huge revision. And they're not being shy about why. They're telling us straight up that it's because of those problems we just talked about. The semiconductor shortages aren't going away, and they're expecting weaker sales from the car business.
But in the middle of all this turbulence, there is one little beacon of stability for investors. Despite this massive profit warning, Honda is saying they plan to keep their annual dividend at 70 yen per share. That's management sending a clear signal that they believe these huge challenges are temporary and that the company's long-term health, likely thanks to that amazing motorcycle division, is still solid.
And so that leaves us with the big multi-billion yen question for Honda's future. You've got the motorcycle division just firing on all cylinders, an absolute engine of profit. But the car division is stuck in a costly, messy, and difficult transition to electric vehicles.
So the question is, can they fix the car business and get it back in the fast lane before its problems start to drag the whole company down? That is the puzzle Honda has to solve.